Good afternoon, everyone. Welcome to the Daily Market Update Show. And today is Friday, so it's a wrap-up show. And so we'll be looking at economic data going into next week, as well as earnings reports and what's the most likely scenario on the weekly time frame where the market is going to be heading. We have a lot of indecision this week, bullish first half. Second was last 2 days was quite bearish. We have a lot of rotations going on in the sectors. So we'll see what will be the most lucky scenario coming in hot next week. So let's take a look at the data first. And so fear and greed index, we're still at extreme greed even after a notable red day yesterday on QQQ. We're down 2.3%. The reason we're still in extreme greed is because SPY is actually holding really well because of other sectors in SPY. So we have the financial sector, the healthcare sector, all holding up SPY, while only tech was dropping in the last 2 days. So that means money is still rotating in the market. So that means there's not a lot of fear in the market still at the moment. So that's why Thursday, this bullish sentiment came in at 51.4%, which is the highest it's ever been in the last year. And you can see, yeah, I've been in the 40s for a while, and this week it jumped to 51. So potentially this could be marking the temporary top for the market. Temporary top doesn't mean we're going to roll over all-time lows. It just means that we likely need some weekly consolidation, which I'll show you guys once we get to the charts. And we have FOMC meeting next week. So this is already priced in 99%. So we've been know this rate hike is coming for the past couple weeks. So there's no surprises for the FOMC meeting other than the things he's going to say. That's the only thing that everyone will be watching. And this second hike is still pretty indecision. It's been fluctuating between 20s and 30s. So this is going to change a lot once we get that speech coming in. So that will determine if the market will need to price in a new hike or not. So we'll see. So if we do need to price in a new hike, we could potentially have slight bearish reaction to the meeting. So the meeting is going to be on Wednesday. You can see right here, FOMC, rate decision. And Jerome's also going to be talking as well. And this one is not a minutes. They just released the statement, but this one he's going to be doing Q&As as well. We'll be seeing consumer confidence. So all these are 3-star volatilities, meaning the more star there is, the more volatile these datas are. GDP is going to be a big one as well on Thursday. Core PC, this is what Fed usually looks at, the core. So we'll see how that comes. And all right, let's get to the charts. Yeah, forgot the earnings. And earnings for next week, I'll be looking at Alphabet, Microsoft, and Meta. So what I want to see is going to be sell the news / sell the earnings report kind of feel that you got from Tesla and Netflix when they reported their earnings. They tanked like 8%. So that happens to obviously Microsoft, Apple, and Alphabet, and Meta is not going to tank 8%, but I'm saying let's say they report a decent earning and you see like them being down 2 to 3%, right? Then that could also potentially mark the temporary top for us as well. Those signs are coming because we got Tesla and Netflix last week, sorry, just yesterday, and yeah, and they came in. No, it was on Wednesday, and then they came in decent, but they I was not expecting an 8% drop from that kind of report. So we'll see if we continue to get those kind of solid news. Even ASML, which is the semiconductor, also reported they beat earnings and they had raised guidance, and they were down 10% in 2 days. So gotta be cautious once these earnings start rolling in. And let's get into it. So all right, we'll start with QQQ, and then we look at SPY and Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta. And so QQQ today was pretty, not a lot of fake outs, but you can see in the morning we gapped up and we hit the support from yesterday. So this was a strong support right here at 380. This level as well. That's pretty much the only support. When I talked about yesterday, that's the only support that's gonna on this way down. And we bounced, gapped up. Once we hit that, it was marked the high of the day because this was a 4-hour bear flag. And it followed through, but when we hit this yesterday's low, double bottom, we bounced. So bulls were playing defense because of how much euphoria we have been in the past months, right? Every time you buy the dip, it's working out, right? Why wouldn't bulls buy the dip here? Is that 12 EMA, double bottom support? Obviously, the bulls are going to continue to buy the dip until it stops working. So the psychology of it is right now is still buying the dip until we get some notable shifts. And right now, we don't have any substantial shift on the daily time frame yet. So you can see the daily pivot right here is still above that pivot, meaning we're still in the daily uptrend. As long as we continue, so we bounce here. It could continue as well. You never know, but it's starting to shape a little bit of a red flag here. So that's why we're being a little bit cautious, especially earnings report are coming in, and seasonality. We're a little bit weaker in from August to October. It's more of a weaker seasonality for stocks. So all those things combined together, and as well as we're pretty overbought, extended at the same time, we may get a little bit of weakness, right? Let's say we just come down and drop all the way down to here. That's not that big of a deal, right? That's like what, 4-5%, right? It may seem like a lot when we're dropping, and then we drop. Say it takes us a couple of days, drop around, bounce here, bounce, drop here. That'll take us into like September, and then we start bouncing, right? And we bounce into the end of the year. That's totally normal for like a bull market. If that and then higher. We, as in a bull market, we also need consolidations and drops and all that kind of stuff to head higher. So now we want to see, as long as bulls hold above this 363, it's still in a daily uptrend. But we actually broke that double bottom support at the end of the day. There was like no follow through at the last hour here. See, we broke below this support. We can technically say it's no follow through, or we can just say we ran out of time. Broke right here, and then bounced, and then chop around, and that's it, right? We can say it just ran out of time. Maybe it could have formed a bear flag and then head lower if we had more for another hour or two, right? So we don't know that until Monday, and we'll say if we'll know when Monday rolls around and we do break this again, then we'll know that it just ran out of time. Especially when you close low of the day, means there could have been more continuation, but we just ran out of time. Same thing if we close at the high of its day, where the stock could have went higher, but we just ran out of time. So that's why there's even strategies like if we close in the high of the day, you want to hold and then swing for another gap up for the next day, all that kind of strategy, or low of the day. It obviously increases the probability that it's going to head lower, just like when we're closing high of day, increases the probability of it's going to be higher in the next day. But those are all just probabilities. That's what we do as a trader to increase our probabilities. And so now, hourly downtrend is still continuing. Right here, we had an hourly downtrend, and then we have it is still continuing. So as long as the bulls cannot negate the hourly downtrend, it will continue. So hourly downtrend is going to be our guide. And yesterday I was talking about that. I want to see a 4-hour downtrend confirm because this is just one initial move. So we got that bounce in the morning, our lower high, and then we have a 4-hour downtrend actually confirming right at the end of the day when we broke that double bottom support. But it's still no follow through yet, just like what I said earlier, ran out of time. So on Monday, am I going to see some follow through here because there's not a lot of volume here. If bears cannot take us to 371, then bears aren't very serious at all because this is all they have to work with, right? It's not like we have a million chops here where there's just so much volume that it's hard for the bears to break through here. It's going to be lots of supports. This is it, right? This is all they have to work with. I get it that there's more back here, but recent action, it's just this is it. So if we do see this 4-hour bear flag follow through on Monday, I want to see at least, let's get to very least 372.8. This level right where we had this top wick, as well as a mini resistance here in this zone right here. So I want to see bears at least get there, and maybe slight bounce. And then if they were serious, they would take us to 371 to 370 zone right at this support resistance zone. Yeah, we'll see. And free bulls bounce right away on Monday. Then we negate that forward bear flag. Negate that forward bear flag. Then bears aren't really going anywhere. Well, this is starting to shape up a little bit like a big. Actually, here there's no right shoulder on here, so more like a big head and shoulders if it happens. Let's see if we shoot straight down to here. That's only 3%. Okay. And you got to have some substantial fear to shoot straight 3% down from after being down already 3%. Yeah, especially if we're already down 3%. For another 3% straight shot down, we'll get quite oversold. And we definitely need a lot of fear for that to just happen. But maybe we'll just get a drop, bounce, get another forward bear flag, and come down here. But as of now, no signs of it yet. I don't want to make any bearish predictions. And we'll see if how the Microsoft and Google going to report on Tuesday. So that's going to be, we get it. Let's say Tuesday comes along, we get some pretty bearish reaction from those two. Then then a 3% is very likely, and then maybe we'll form that big head and shoulders. See on the daily. Does also look kind of like it also looks like it on the daily as well. Right, let's take a look at SPY. SPY very similar, but is a lot stronger. This could still be like a bull flag on the daily chart. Let's see here. On the move to top of the move. Yep, we still haven't even gone to the 0.382. This can still be a daily bull flag on SPY at the moment due to the healthcare sector being green, the utility sector is being really green. That's the defensive sector. So we may actually get some rotation to defensive sectors, which is the third day that I saw it being rotating to the defensive sector. So big money may starting to be a little bit defensive. So that's another sign that this might be QQ's temporary top. And as of now, no red flags on SPY at all due to it holding. If it wasn't for QQQ, SPY would have probably made a new high, 52-week high. Because there's XLK, which is the technology sector in SPY, which is pretty much QQQ. And that's why it's been dragging down a little bit. But you can see SPY didn't even test yesterday's low. Right. As long as SPY holds above this low and above that 0.382, we're still in a daily bull flag. So we can, yep, no signs of 4-hour downtrend yet. This was the pivot. Bears had to take this below yesterday's low for a 4-hour downtrend. QQQ already formed it, SPY didn't. So when you're playing short as a bear on QQQ and you look over at SPY, you're like, SPY is still forming a daily bull flag. Then you don't get as confident, right? Versus SPY's dropping and the QQ's tanking really hard. IWM is dropping, Dow is dropping. And then you're like, all right, full on steam mode, shorting the market. At the moment, Dow is super green week for Dow, and Sp500 holding decently. QQQ doing its consolidation, it makes sense. QQQ's been the one that's moving up the most, right? Obviously, when it drops, it needs to drop them more as well. Still, nothing extremely red flag in the market yet. Nvidia starting to look more like that daily head and shoulders look, more potential here than QQQ. We'll see if Nvidia actually forms it first, but it has actually a lot of room for it to drop for that to happen, right? 8.8%. And I mean, you could say, sure, if this thing can go up 24% and 40% in 3 days, 4 days, with this earnings report, maybe dropping 8% is not that big of a deal. But with something like this, how strong it is, there's gonna be a lot of people buying, especially on the way down as well. So until the sentiment really shifts, so this is the daily pivot, the last daily pivot right here on the 421, sorry, 413.46 right there. So we're still going to be in a daily uptrend right now. Even if we drop all the way down to there, we got 6.6% move before it becomes a neutral trend. And yeah, so I don't see, although it's our first time closing underneath the 12 EMA, you can see over here we came straight up to it. yeah, we'll see. Start breaking this fourth right here, 437. We're gonna shoot straight down to 420. That's my opinion, and that would look like a blow off top to me, because that would be, we're already down 7%. If we're down another 5, that's gonna be 12%. Yeah, that was starting to shape up blow off top for Nvidia, and potentially they have earnings coming up on the, still quite a bit away, another month. So yeah, nobody's in, won't be a earnings trade at the moment yet. So our trend formed a bear flag right there, confirm right here. This is the bear flag, and then it confirmed. So that's a 4-hour downtrend now. So you can see how much weaker it is compared to QQQ, where QQQ just broke and then bounced a little bit at the end of the day. NVIDIA actually broke and then followed through the bears. You can see right here, when I talk about there's no volume, meaning the bears should very easily be able to take us to 437 on Monday. If they can't, then I don't know what they're doing, and because they aren't really serious about taking this lower then. If they are, I would say 437 is on its way, and it'll likely bounce a little bit there, and then we'll see if it can break that afterwards. So now we'll just have to wait till Monday. But it's 4-hour downtrend is confirmed now. So now we got to zoom out to the daily. We'll see if it can confirm on the daily. Daily is only one single move at the moment. So all right, let's take a look at Tesla. So Tesla, after its earnings on Wednesday, it's just been looking really weak. And let's see where it should bounce. Okay. So I talked about this yesterday, where we do break 263. This structure is going to be where the last battle zone is going to be for bulls and bears. Bulls definitely want to hold that zone, because if we don't hold the zone, there's nothing really beneath us. See right here, just a couple of days trading down here, and then it's just a waterfall over here. So the last thing bulls want to see is us breaking below after this zone. There's more support here, and a little bit left here, nothing down here. So that is what bulls definitely want to hold. My guess is that due to the size of this drop, the next time it bounces, it's going to favor a lower high, meaning this high of the pivot is lower than the prior pivot high. Get a V shape, then I'll be impressed. But you never know, anything can happen. But the technicals right now, due to the size of the drop, it's going to favor a lower high. And then let's say we come down here, bulls play defense, double bottom, negate the daily downtrend, then bounce. Then we can potentially start shaping up a higher low, potentially to get that trend back to you guys. But this kind of structure would take time, right? Now favoring the bears, so we want to see it get negated once we get more price action here. Then it'll start favoring the bulls. But right now, it's in full bear control, and hourly is in a downtrend. 4-hour is also in a downtrend right here. See that pivot, but we broke it. Not a lot of follow through either. So we'll see. Especially when QQ doesn't have a lot of follow through, you're not going to get follow through much on the big tech stocks either, because QQQ is the one that's leading them, and we'll need to see more QQQ red for all the mega cap to have more follow through on the downside as well. And the next level I'll be looking at is 252. I want to see that hold. If we don't, then we're definitely looking back down here at this 240 zone. All right, take a look at Apple. So Apple has been holding really strong. It just hasn't dropped at all. Last 2 days, QQQ was down over like 2.6%, and Apple is down 1.6. So pretty much it didn't even drop. You can see we're still holding the 12 EMA on the daily, and holding it for sure. If we're holding on the daily, then we're holding on the 2-day, right? Still talking about this 2-day EMA 12, holding it for months. Bounce off here again. Now it's still above it. So although it's You can see every time we make a new high here, every time we make a pivot, make a new high, it's always a lot higher than the prior high, right? But this time we made a new high and was sold off, and we're kind of like back into this prior zone already. So that's potentially a little bit of like we're just not getting a lot of buyers left on these levels, and it's not that big of a red flag at the moment because we're still above the prior pivot. We're still in a daily uptrend. So, but it's just a small sign where we can actually be lacking buyers in this price level now. And yeah, if Apple doesn't break daily EMA 12, not really going anywhere for bears. And then it's a 2-day, and then we'll see if we can break this pivot. So now, no signs of that yet. Though we do have an hourly downtrend here on Apple, small one. And 4-hour is, yeah, you could argue it's a 4-hour downtrend, but this is pre-market. Pre-market action here on this candle over here. Yeah, no red flags on Apple for me. Let's take a look at Amazon. Yep. So Amazon, I talked about this one on where it broke all the pivots and the supports after this day. It's looking good over here actually when it bounced, but then when you made a new this low high was not higher than this high, so the daily uptrend did not continue. And then the next day we got this 4% drop where it just broke through this support, and then when we broke down this one, the 131, that's a bigger red flag because 131 was supposed to act as really strong support. And then we retested again today in the morning over here when we gapped up, rejection, and then we rejected again. So that's starting to shape up a little red flags for me in the shorter term time frame, especially after we retest. You know how I talk about retest? When we break a support, we want to retest, or when we break a resistance, we want to retest. And when we get a rejection again, that's when you can add that short. And yeah, we got more follow through from the bears. Bounce into the end of the day when QQ bounce as well. So we'll see how it shapes up. See the 4 hours. 4-hour is also in a downtrend. And we're coming back into this chop zone. So it'll likely probably chop in this zone as well for some more time. And before it decides where the big tech's earnings on Tuesday is going to show us direction. Google. Same thing. Very weak. This move was good. It was trying to shape up, almost shaping up a daily uptrend if we do come from up here. But then on that same day, Wednesday, where everything dropped, actually it was Thursday, everything dropped. But on Wednesday, Google was relatively weak, and then more follow through from the bears. Now it's shaping up like a equilibrium. If we have a big move up, big move down, it'll likely tighten up into its earnings report. That's only 2 trading days away, so it probably bounced a little bit, depending on QQQ on Monday, if it's going to go red or not for that 4-hour bear flag follow through. If the 4-hour bear flag follow through, we're probably going to go down to this 116 on for Google, because Google is relatively weaker than QQQ lately. So then today's outperforming it a little bit due to how much it's been dropping versus QQQ. And you can see Google has dropped 7%, right? So it's relatively weaker than QQQ today. Past week, I mean, today is relatively stronger because QQQ was red and Google is up 0.7%. So yeah, 116 would be the strong support. And Tuesday's earnings, if we close at 116 and we get a bearish reaction on earnings, it's going to probably just drop all the way down because there's no support in this zone. Really nothing, especially as a gap. But if we get a good reaction to the earnings, then we'll probably bounce back up. So we'll see. Put that calendar down in your calendar. Tuesday earnings, Google and Microsoft. Same look with Google, but this is a news blow off top where they announced AI news, and then we sold it all the way back to pretty much give all that news gains and give it more back as well. So that's a what we call a blow off top, especially for a mega cap. Down 7% is quite a bit. 7% is pretty notable, and we'll see. So next time, so the size of this move drop. Next time we bounce, it's going to favor the bears for a lower high, meaning this high is going to be lower than this high. Then that would shape up a daily downtrend. As of now, no signs of that yet. So let's take a look at the 2-day. Okay. Hourly is for sure in an hourly downtrend. We don't even need to look at that. 4-hour is also in a downtrend as well. So Microsoft being weak, Google, Amazon also weak, Nvidia also really weak, Tesla also really weak, Apple holding strong, and let's take a look at Meta in a second. Let's see here. So yeah, we bounce off of it here, obviously. It's 342, where we've been bouncing off of it many times. See all this rejection as well when price is under it. So when we came to it, it's pretty reasonable for it to bounce initially, but then the next retest is going to be where it's going to be the real one, where it may potentially break or not, because when we come down from the top here to here, bears are already exhausted. That's why we can bounce when bulls play defense. Then they cool off a little bit and bears try again. That's when the real battle is going to be. Bulls can hold that again, then we'll have a good chance of coming back to 350. Well, earnings report is going to be on Tuesday. That's going to definitely dictate where this guy is going to go. As of now, it's still starting to shift a little bit like a red flag, but no huge red flags. But I don't like the size of this drop. It will start to give probability to the bears for the downside. I want to see it report its earnings first before making any trades on Microsoft or Google. And we've broken the daily pivot here. So we're in a neutral trend now, not in a daily uptrend anymore. Weekly and the monthly, still in an uptrend. All right, let's take a look at Meta. Meta was lead bull forever until the last 2 days. And 7% drop in 2 days. So this was a daily uptrend all the way to 318. Let's take a look at what 318 was. So 318 was the structure of the all-time high structure, pretty much the low of it. That would act as a strong resistance, and it's pretty much what we got. And on Wednesday, with that sell-off, it made sense that it sold off. But then this today was relatively a lot weaker. Meta was the lead bear today out of all the big techs. And essentially, we are in an hourly downtrend as well as 4-hour downtrend. There's a 4-hour bear flag here, rejection from 12 EMA. And we're back to this structure now. So the next support is going to be 289. Look when we break that 300, what it looked like. Bear break of 300, retest, rejection, and then you can see the follow through. So when I talk about the retest and then rejection, that's when a good time to be short right there on the rejection. Yeah, that was a pretty clear rejection. And so where Meta likely trade next. Support is going to be right here, 29. I think it's probably going to top it around here until its earnings report on Thursday. It's on Wednesday. So yeah, it's coming up. It's only 3 trading days. Then we get another drop, bounce. We get a green day, bounce, drop, bounce. It's Wednesday already, right? And you can see how many times we rejected from 289 here. So it has to act as strong support. If it doesn't, if we cut through 289, that's a huge red flag. Due to how many times we cut through 289, that's another, it's going to be the double-digit drop. Because there's a lot of support here and volume here. So if it's not going to even bounce here, then that's a really big red flag. I was expecting a little bit of bounce. We did on the smaller time frame on 300, but that was just very little bounce. You can see notable selling from here. Yeah, it's bulls. Hold 289. Bears. Let the bulls bounce a little bit, and form that. See if we get another bear flag. See this week 4 hour down here, bounce. That far bear flag in, then you can get it in again. And see if the bulls are serious about taking this up or not. Not, then we'll get more follow through on the downside. And make sure there's earnings report on Wednesday. So we'll see. All right, that's all I got for you guys on these talks. If you guys got any questions, let me know. Feel free to put it in the comments, as well as if you subscribe to make it this far or learn anything, like and share. And I will see you guys tomorrow for natural gas update. And Sunday, I will see. I'll do something new. But have a great rest of you guys this weekend.